All right, last time we talked about gross pay, so this time we're going to talk about net pay and deductions a little bit. So there's three big deductions. There are a lot more that can come up based on specific tax circumstances. We're just going to focus on these three for today. So net pay means pay after tax or after deductions. I say after tax because that's your biggest deduction, but CPP, EI, other stuff counts too. And basically, net pay is how much actually goes in your pocket. Gross pay is the big total number, but after you lose all this money to stuff, net pay is what goes in your pocket. So CPP, Canada Pension Plan, pension basically means money you get when you retire. So the idea is that the government is worried and afraid that people, when they retire, are not going to have enough money saved up. So retiring is when you stop working because you can't necessarily work when you're really old. So for people who haven't saved enough money, they help them save money. So the idea is that every month you got to pay a little bit of your income. This is a percentage, which means if you make more money, you have to pay more. If you make less money, you have to pay less. So it's supposed to be fair that way. So you pay your CPP, that gets taken away from your net income. Calculating your CPP is kind of complicated. It's a percentage, but there's a bunch of rules. There's a lot of calculators that will do it for you, and when you do your taxes, it's basically calculated for you. What's more important is that when you retire and you want to actually get CPP, how much do you get? So there's different numbers. I think the average right now is about $700 per month. So I hope you realize $700 per month is not great to live on. Like maybe it's possible, but it's definitely going to be tight. So if you're planning, like when you retire eventually, you definitely have to have savings. The CPP will help you. You will have some money to pay for food and pay for rent if you need to and stuff like that. But you will definitely need to plan for retirement and save your money in addition to CPP. The other thing with CPP is if you don't work enough, you won't get as much money. So if you don't work enough, and again, there's complicated rules, but if you don't earn enough money, you won't necessarily make $700. You can make something smaller like $350, or you can make nothing depending on how much you work. Employment insurance is different than CPP. The idea is, after the Great Depression, a lot of people lost their jobs, and it wasn't necessarily their fault. So, but the worry is if you lose your job, you don't have enough money, you can't survive. So the government set up employment insurance. And the idea is that every single month or year when you do taxes, whatever, you need to pay money into a big pot. Okay, think of it like a bank account. So everyone in the country puts money into this. Every single person who makes money. Okay, they all put it into the pile. But then whenever someone loses their job, so let's say this person lost their job and it wasn't their fault. Okay, so like the company went out of business and so they had to fire all their employees. This person now has no money. So what happens is this person gets to take some money out from employment insurance. Again, it's based on like how much you put in and stuff like that. You don't necessarily get a lot of money, but it's supposed to help you until you can find a new job, and then you can start putting money back in the pile again. A lot of people are never going to lose their job and never going to use EI. But the idea is everyone pays in the pot to help out just in case you need it. Same with like taxes, right? We all pay taxes to the government, but not necessarily everyone uses hospitals the same amount. You pay it just in case. Okay? So this is in case someone loses their job and it's not their fault. If you quit your job or you got fired because you broke the law, you're not allowed to get employment insurance. Okay? You don't get the money back. The last one is income tax. This is the huge one. These two are not very big. Income tax is huge. You will lose thousands of dollars every single year, and we will go into more detail about income tax. But basically, you need to pay money to the government. Why does government need money? They need money to do all the things that they do. Okay? You pay income tax to the province, and you pay it to the federal government, which is like the government of Canada. The province does stuff like healthcare, education, stuff like that. Those are like the big two. The federal government does stuff that's for all of Canada. So some of it's like prisons, running government, paying government employees, doing stuff like the military, trading with other countries. Like there's a lot of things the government needs to do, and it costs money to do it. Okay? So when we pay income tax, it gets taken away from our taxes, or from our income. So a lot of the questions you're going to do for homework are basically calculate how much this person made and then subtract it. So just to give you kind of a rough idea, here is, I use this website, Simple Tax Calculator, whatever. It's okay for getting an estimate. When you actually do your taxes, it's got to be a little more advanced. You can write your province, so BC, and you put how much money you make. This is your gross pay, $30,000, and then it gives you a rough estimate. So you are going to have to pay in CPP and EI only $1,800. Your federal tax and your provincial tax is going to be like $2,800, and so that's the total that you have to pay. So the net pay right here is 25%. If you change the numbers, so if we made it like 60,000, it's not just times 2. It's a lot more complicated than that, and these numbers work out like this. So this is just something you can mess around with, and we will go in more detail about it later. But that's how these work. That's it.